Someone said the ice cream truck when they were little. That was one thing. My dad would sometimes add money to my Easter eggs, and I would give it to my mom so she could save it for me. The concept of McDonald's money at the age of 5 or 6 and holiday gifts from family members. Wow. So how do you think that someone else used to collect used change from the dryer and put it in their piggy bank? Arcade money. So how do you think that influenced how you thought about money? Where did you think money came from? I thought it came from my dad.
Well, if he gives you money, then it does come from him.
Someone said working at a job. Anybody else? So when you were that age, did you really know that money came from working at a job? Sort of, not really, maybe.
Yeah, I did, because my mom always said money doesn't grow on trees. So I kind of like grew up knowing that. I had to work for my money. That's
good. Yeah, it's true. What other kinds of idioms did your parents tell you besides money doesn't grow on trees?
For me, it's like, it's easy to spend money, but it's hard to make money.
Yeah. Anyone else? My mom used to say, we're not family to Edison. And I never knew what that meant until I got older. But Edison was the electric company. So that meant we had to turn the lights off all the time. One of the things that we talk about a lot is like the psychology of spending. And mostly that is your attitude towards spending, which can be very complex. Sometimes it's based on, your friends or your sociological part. Sometimes it's what you think about money, how you learn to think about money. And who do you think influenced you the most about money in your life?
For me, it's probably my mom influenced me.
Parents? Anybody else? Mom? Aunts, uncles, siblings, friends, sister? Why were they so influential? What were they doing that was so influential to you? She's strict.
Saving money.
Saving money, that was a big deal.
I agree with that. When I was always younger and would get like money, my parents would always make me put it in a bank account. And now having been at college for like 2 years, and like I feel like I'm very frugal now, like even having to buy like my own groceries. Like I want to spend as little money as I can just to like save it off and like pay those like loans.
Yeah, understandable. Anybody else? Or parents were always working. They told you about their life growing up. My dad did. My dad would always tell us about his life growing up.
Sometimes it's positive things, and also too, it's also fair to say, I know for myself, the perceived lack of money was also a big part of family dynamics, and there could be a lot of stress that comes from that.
What kind of things do you guys think about money? Is money power? What does money mean to you?
For me, money is like something that you need to survive, but then at like a certain point, money doesn't buy happiness. Like I saw like a diagram. It said it's like an upward trend, and once it reaches like 100,000 income, that's when people like the happiness level of someone doesn't keep rising; it just stays there.
Yep, that's true. Very true. Money's a tool. Money doesn't really buy happiness. A lot of people think it does. Survival or stability. Stability. Success. And those are all true. And those are all things that we think about or maybe have learned or someone has talked to us about what money could mean. It could mean freedom. as someone has said. But do you guys ever feel influenced by, you know, the sociological part, like your friends, your peers? Do they influence you about money? These all happen to be things, the way that you think about money is also the way that you spend money. So that's the connection there. So like the person who probably influenced you the most is the way you think and you'll spend your money. So those who like to save, like Nadia said, Natalie, sorry, she wants to save because her mom and dad made her save her a lot of her money. My mom and dad, but they were spenders. They were more spenders. And I started out the first half of my life spending. And then all of a sudden, I decided to start to save. And I liked that better because I actually could see the numbers grow. And to me, that was exciting. Does that resonate with anybody? Yes. Okay. So there are a bunch of different types of money personalities, and I would share my screen, except I'm not very good at Zoom. So I'm going to read a couple of them to you. Some is entitled. You can justify your purchase by saying, I deserve it. Some is a dreamer. You get happiness from spending. You like to spend because it makes you feel good. All those endorphins get going. The risk taker. Sort of like you get this adrenaline rush because you feel like it's so exciting to spend or to try to do something different right on the edge, maybe spend a little bit more than you can afford. The shopping addict. You just like to shop. You just want to buy what you want to buy. The defiant one. That's somebody who is sort of angry or aggressive towards money because it doesn't always do what you want it to do, or it doesn't go the way you want it to go. There's also the hoarder, somebody who likes to save all the time because maybe they're fearful or maybe they just want to see it grow. They just don't like spending money, that's it. And then there's the ostrich. So you're the one who likes to put your head in the sand. You don't like to deal with anything. You just think that if you put your head in the sand, it'll all go away. And you know, it gets me, you're like, oh, it's too complicated. I can't pay my bills on time because I can't remember. Those are some of the different types of money personalities. Anybody resonate with any of those?
Maybe the one where like you say, I deserve it. I think that maybe fits a little bit.
Anybody else? I have one that feels like the ostrich. No order, yeah. I used to be the shopping addict, but now I think I'm not quite a hoarder, but I'm more of a saver. The dreamer. Not that any of these money personalities are bad or wrong, and they're not. They're just the way that you spend money or the way that you think about money. And one of the things that would be helpful for you in any of them is just to think about what are your priorities and what you want to spend your money on. So are you spending your money on the things that are important to you? Or maybe spending your money on something that's not important to you, but you're not really sure why you're spending it. Anybody do that? Like you buy something and you're like, what did I buy that for? Yes, I got a couple of yeses. I do that sometimes. I'm like, I didn't even want that, and I bought it. Sometimes one of the tricks that I use for myself is I will, if I want something and I know, like especially online, and anybody gone crazy with shopping online? Not that I do it all in punch, but what I do is if I see something I want, I will make myself wait at least 2 or 3 days. Because if I still want it, I'll still want it in 3 days. It's not just an impulse buy. Anybody do that before COVID? No impulse buyers before COVID. I was definitely an impulse buyer. I think I got that from my mom. But it's also good to put in some type of, sort of like some type of, I don't want to call them barriers, but some type of sort of like restrictions that you put on yourself that you feel comfortable with before you start buying something, just so that you can make sure that you're staying with your priorities and not buying just for impulse. I mean, impulse buying is fine once in a while. Don't knock it. But for the most part, if you're trying to stay within your budget, try to make sure it's something that you will line up with what you want and where your goals are going. Okay? Someone is thinking about switching from hoarding to entitled, just so that they can buy more things, so that they will think about such things longer before they buy them or psych themselves out of buying them. Yes. I'm the type of person who would go to the grocery store and I would just walk through and put everything in my carriage that I just saw. And then by the time I got to the other store, I would walk back and put half of it back because I knew I didn't need it. I just was buying because I saw it, but it wasn't really on my list. So making those kind of habits, those new habits of listing or kind of, my dog has not barked all day, and now he's barking. But making those kinds of lists, just to help yourself to be able to stay within your priorities or your budgets, okay? So I'm going to let Ari take over the budgeting piece for the time being. Any questions about what I was talking about? Psychology of spending, anything? No? Good. All right, Ari, take it away.
So what we're going to talk about is a bit of introductory stuff regarding budgeting and saving money, and then I'm going to give some kind of explanations on banking and credit. So something that I will certainly preface is that maybe for some people, this information might be things they're familiar with. For other people, this might be something that they're seeing for the first time. We want to be sure that everyone has the ability to access this information, and that we don't want to necessarily assume where someone is when it comes to some of the knowledge. So what I'll say is that some of this information might be familiar to you, but if you have questions that come up off of it, questions that might be a bit more complex, please ask those, and we definitely would be happy to answer. So some of you might be using a budget, some of you might not be using a budget. Is anyone actively saving for something? And you can feel free to, okay, Sebastian, I saw you raised your hand.
Yeah, I'm just like trying to save for like college.
Okay. Certainly a major expense for sure. Are other people trying to save money towards college expenses? Okay. I see some people shaking their heads.
So
Tyler,
I'm
I
like
saw you
taking a
raise
few
your
film
hand as well.
classes at BC, and I'm planning to save up for a really expensive lens for my camera.
Okay. I also am interested in photography as well, so I might be interested to hear what kind of lens you're saving up for. There are lots of different goals that people might try to save up for college, for sometimes personal purchases, sometimes things that you might need for a class. Sebastian, I see your hand.
Also to control like the flow of money, like how much is coming into you, but how much you're spending it.
Mm-hmm. To make sure you're not spending more than you want to, or more than you plan to.
Someone else said in case of emergencies.
Okay, yes. Emergency funds are actually something we're going to talk about during the slides. So these are all.
I'm sorry, I'm going to give a couple more.
Oh.
They're talking about practicing living on their own,
Mm-hmm.
to establish stability. Let's see. So you can have money for when you really need it.
Yes. I'm glad that. Thank you for keeping an eye on the chat. I didn't know that people were posting in the chat. These are all good reasons why you might want to budget or save money. So, like people said, having a budget can give you a strong sense of what money is coming in, what money is going out, and it can be especially useful if you have some kind of financial goal for yourself, like you're saving for something, like perhaps a camera lens. So just to go over some of the other benefits, it lets you identify where money is leaking, where money might be going out in a way that you didn't anticipate or plan. It can also be helpful for money habits, like Marcia was discussing some of the attitudes and habits people have. This can help support that. It can help you feel less stressed about money. I know for myself, I used to, before I budgeted, I would feel guilty about making some kind of purchase for myself that wasn't strictly necessary, like perhaps like getting myself some takeout. But having a budget, allocating a certain amount of money towards it each month can help you make those purchases without feeling so guilty about it. That's something that I feel I really benefit from when it comes to budgeting. It can also be helpful for debt. A lot of people have mentioned that they're really interested in talking about student loans. That can be something that you might want to budget for, money towards paying down student loans. And it can also just help you save money if you find out where money is going out that you didn't intend. So a lot of the reasons why people might be inclined not to budget is that it can be perceived to be really hard work. People can also perceive that it doesn't matter because if I'm spending money and I might not have enough money, then what does a budget help? A budget doesn't give me more money. But there still are benefits to budgeting even if you have financial constraints, especially I would say in that case. Procrastinating can be another reason. Some people have supports that can help them if they make some kind of financial mistakes, like family sending them money. And also people might be inclined to think, oh, I have student loans that can pay for it, which student loans can be a good way of helping supplement living expenses, but there are some downsides to that, which certainly many people are aware. Student loans do charge interest.
How many people are actually budgeting right now? A couple?
I see a couple of
But, and of the people who are not budgeting, what kind of obstacles do you guys have? Like, why aren't you budgeting? You don't have enough money? I didn't have to. I actually didn't start budgeting my money until I was in my 20s. Yeah, I didn't know that it was important before then. And then it was probably around the time I got my first car and I had to make a car payment. So I had to figure it out.
Yes. Many people are often thrusted into situations where they need to figure out how to budget in order to survive, in order to pay off your car loan, for instance.
I know a lot of times we think we don't have enough money to budget, but sometimes in those situations is when it's more necessary.
Mm-hmm. It can be really hard if you were to create a budget and it paints that negative kind of financial picture. That can be really, heartbreaking to see. That can be really disappointing. At the same time, it's still valuable information. So if you might be interested in starting to budget, there are some people who already do budgeting. This might be useful to check to see how this lines up with the way you budget. But this can also be especially useful information for people that are looking to start budgeting or considering it. Maybe they might have thought, I don't know how to do it. So this might give you some kind of idea of how budgeting works and how you can actually accomplish it. And that might make it feel a bit less challenging. So we're going to go into detail a bit more on each of these steps, but just to read through the list on what you would do for a budget, you would want to identify the sources and amounts of income, and we'll talk about that. You'd want to find out where your money is being spent. You'd want to create budget categories. ways, and we'll give some examples of that. You want to then put it down in writing. It's a lot better to put it in writing. We talk about some of the different ways you can do that. It doesn't necessarily have to be an Excel spreadsheet. So, I mean, for me, I like being very precise. For me, it is an Excel spreadsheet. But there are lots of other tools that require a bit less work. Then once you have that, you can then calculate the budget amounts and set goals for yourself. You can set a goal maybe to spend more on this or spend less on that. So to kind of go into a bit more detail, so income is where is money coming in? Where am I getting money? And there are lots of different places where that might be coming from. For students, some of the examples are student employment. I know we had some questions from students about work study. A work study might be a source of income. Student loans are another place where income could come from. You might be using student loans to help supplement some of your living expenses. Maybe you use it to help pay for food, for instance. That can be an area where money is coming from. And you could also maybe have a existing savings account where you've been putting money away as you're preparing for college, like I know some of the people mentioned they were doing. That can be a source of income as well. Savings account themselves actually produce, I don't know if that's the right word, but produce money. You do get a bit of a rate of return. You do make money off of having money in a savings account. So that's a way to have your money work for you.
What are some of the ways that you guys, or where does your income come from? If it's other than something on the list. Gifts, internship, selling clothes on Poshmark, awesome. Parents, jobs, that's great. Okay.
All these are definitely good examples of sources of income.
Unemployment. I'm psyched to hear someone say they found money on the ground. That hasn't happened to me in forever, and I did that this past week. I found $6.
I'm not sure if that's the most reliable source of income, but I certainly would appreciate that one too.
Yes, definitely appreciated. Tutoring. Okay.
So there are lots of different places where people can make money and bring money in. So the counter to that is your expenses. Where does money go out?
Before you start, I'm going to ask them to tell me, what's your biggest expense? What are you guys spending money on? Weekly, monthly? Food and clothes. Is Uber Eats a big part of your lives? School and food. Food.
Tuition.
Does anybody eat at home? Spotify. Delivery costs too much. Okay. Yep. Yeah. When I've done this presentation in the past, Uber Eats was a very big thing, or Uber as well.
Yes, I imagine Uber is a bit lower now since no one's traveling.
This is true. Pickup is always better. Is that because you can eat some on the way home?
Yeah. These are all good examples of different expenses people might have. It seems like people get the idea of what expenses are, but you can actually categorize expenses into different types. We have recurring, variable, and yearly. What do people think is an example of a recurring expense?
Maybe it's like a subscription, like Netflix or Spotify.
Yep, those are good examples. They recur for the same amount, assuming Netflix doesn't raise the rates every month. And they occur on the same day each month, usually.
When you say bills, what kind of bills? Car payments, phone, rent, utilities?
Yep.
Someone has a mortgage, Wi-Fi. Those are all good things. And a good way to like track your spending. Those are reoccurring. Anybody have any variable bills or expenses?
They might be a bit different each month.
A variable expense is something that comes in once a while, or maybe changes every month, like, I don't know, gas. The gas bill changes every month.
Food can be another one, since I don't know about you, but I don't know if you spend the exact same amount on food each month.
Water bill changes every month. Food changes every month. Food is both a reoccurring and a variable expense because you can spend at different amounts at different times. What's a yearly bill that someone may have once a year? Anybody own a car? Do you have excise tax? That's a yearly bill, comes in once a year.
Other types of paying taxes are usually yearly. You only have to pay, if you have a tax bill due, you have to pay that once a year.
Someone said tuition, because you have to pay it each year. True.
That's another good example.
Right.
One of the important things about yearly expenses is you can usually anticipate these and start planning for and saving for these ahead of time. You know when your tuition bill, for instance, is going to be due, so you can plan for that ahead of time. There are also fixed and discretionary expenses. It seems like there's a bit of overlap on the slides, but I can read that part to everyone. So some examples of fixed expenses might be rent. Rent, you have to pay. The rent is something that you have to pay. You have to have a place to live. A meal plan is another good example of a fixed expense. I believe for first-year students, BC does require a meal plan. Is that true? So, and regardless of whether or not BC requires it, you do have to eat. That's a requirement for living. Utilities, haircuts, though those haircuts have been waylaid a bit, I know, for myself, with everything going on.
We had cell phone as a discretionary expense, but those have become more of a fixed expense because everyone has a cell phone now.
Yeah, for sure. Like Marcia was suggesting, discretionary expenses are ones that are not necessarily required. Like going out to restaurants, whereas eating food and getting groceries is a requirement in order to live. Restaurants, you have a bit more discretion, you have a bit more choice about how much and when you spend on that. Once again, cable television is an example, though I don't know how many people still have cable television. Takeout, more expensive clothes. Those are examples of things that are discretionary, that you don't have to necessarily have to live. So some examples of when discretionary expenses can go a bit wrong. Money leaks. The idea is essentially that you might be spending more than you think, more than you plan. Some examples of that here we have on the slides is, let's say you go for dinner and drinks, strictly non-alcoholic drinks, of course, with friends every Saturday night. That can easily, especially in Boston, get into the $25, if not more, price range. Now, if you do that every week, that can come out to be $1,300 per year. Same with Uber. An Uber ride could easily be $15. Maybe you do that once a week. I know I actually remember one of the previous presentations, someone said they would take an Uber from the lower campus to the upper campus of Boston College, which, I mean, they seem pretty close to me, but who am I to judge? But Ubers can add up. They can be
One thing about money leaks is that we call them leaks because sometimes we do spend more on them than we actually plan to, but it doesn't mean that we can't do them. It just means that we should check and see if they're lining up with our priorities. You know, if going out to dinner with your friends is a priority and that's where you want to spend your money, then you should do it. But if you feel like you're doing it too much, then you need to maybe make some adjustments. But if you were saving for something really important and you had to do it quickly, this could be a way that you might be able to temporarily adjust your spending so that you could try to save that money towards something else that you wanted or maybe needed more quickly. We had a student once who was talking about buying a new computer, and he was probably spending like the $40 a week for coffee, and someone challenged him to save that money, to make his coffee at home, save the money, put the money in a can next to the coffee machine that he had, and just to see how much he would come up with at the end of the semester. And at the end of the semester, he had $1,000 and was able to buy his computer for cash. So sometimes, it's not wrong that you're buying any of these, but sometimes if you need to make an adjustment, you can look at your budget and see where you could sacrifice for a short time.
Like Marcia said, it's not saying don't do these things. Having dinner with friends can be, a great way to celebrate making it through the week. The important thing is that you're aware of how much you're spending and that you're making a choice to do that. Knowledge and choice is what we would most want you to get out of making a budget. So once you get some of this information together, you're going to start making categories for money. We'll give some example, I think, on the coming slides. And what are some examples people can think of for how you might categorize money, how you might categorize spending?
I like to think about it like as a need and as a want. Like, I guess those are two separate categories.
Yep, like we were saying before, fixed versus discretionary, for sure. You might also categorize things. I know for myself on my budget, I say this is groceries, this is takeout, this is for rent, this is for utilities. So there are different types of budgeting styles. Just to give kind of a quick overview for some of these, a budget tracker is just simply tracking how much money you're spending, tracking how much money is coming in, and not necessarily trying to act upon that information. Now, then there's a different way. I think it was Sebastian was saying that you can distribute based on needs and wants. The 50-30-20 plan is spending 50% of your income on things that you need, 30% on things that you want, and 20% putting that aside to save. And there's also the 80-20, which people might feel is a bit simpler, 20% savings and 80% all your expenses. And another thing people might like to do is put together different sub-savings accounts. So you can open multiple savings accounts at a bank. So you might have one for car repair, one for vacation, maybe not vacation right now, but you might have one for computer, you might have one for a camera lens you're saving for, and you can have a different saving account for each one of those, and you can actually have your checking account, your bank account, automatically take a certain amount out each month and put that into your savings for you without having to look into that. So now, like we said, you want to put your budget into writing. And like I said, of course, you can use Excel, Google Sheets, and you can make something like this. Personally, for me, that's what I like to do. But there are lots of tools here. You can see some of them we have on the slides that allow you to do it in a way that requires less hands-on work. Mint is one that I can definitely recommend. Mint is very useful in that it will automatically track your income and expenses for you. You can connect it with your bank account, with various other accounts, and it'll do that all for you. But this right here on the slides is what a completed budget looks like. You can see there are different categories, the different amounts, the estimated salary, the costs added up, and then you can figure out how much money you have left over afterwards.
I'm going to jump in here. We're running a little short on time, so I want to make sure we get to credit as well. One of the questions that came up is what banks do students use? And I'm going to say that it depends. You know, there are some banks or credit unions close to school. There's University Credit Union, there's Bank of America, there's a few others. Some people still bank from home. So it really kind of depends, because even if you do your work study, you can have your checks direct deposited. So you could have it direct deposited to your account at home so that you can still use your debit card if you have one. Or you can open like a savings account here or something like that. Other, some of the things that you may want to consider when you're opening these up is looking to see if they have a student account where there's no fees, but you might still be able to use your debit card. You need to check and make sure there are no restrictions on how many times you could use your debit card before you get charged. And as Ari said, you could open up savings accounts for different things. Someone also asked about how much is a good amount to have for an emergency fund. Generally, the rule of thumb is to have like 3 or 6 months of basic living expenses saved up. You know, and especially with school starting, and we're not sure what's going to be happening with COVID or whatever, just making sure you also have enough money saved up in case we have to go home. So, you know, making sure you have money for that as well. 3 months is probably good, you know, and then maybe just a little extra just in case something happens and you have to fly home in an emergency.
And something I'll add on that is this is what we recommend, and emergency funds, like Marcia said, are very important. At the same time, we do know that when people are students, that's often the time when they're making the least money out of their working careers, and it can be hard to save up that amount of money. So at the very least, we want you to make sure to remember that this is the amount that you want to save for an emergency fund, and hold on to that information for when you graduate and start working a full-time job and are making more money at that point. So if you can do it while you're in school, that would be absolutely great. But it's not necessarily something you should feel bad if you don't have the amount of income in order to start putting away towards that.
Another question was, does interest increase with the more money that you have? And the answer is, it depends. Not on a basic checking account or a savings account. A lot of them will have a set interest rate on savings accounts or checking accounts. What would happen is if you got more into like the investing side of things, then that would increase your money will increase, or the interest could increase depending on how much money you have. Generally, a lot of banks will have just a fixed interest rate for your savings. Not on student accounts, they usually don't have interest rates on your checking. And just to remember that on your savings accounts, that you can't make any more than 6 withdrawals per month. And the reason for that is they don't want you to use it like a checking account. You're supposed to be saving money in it. So if you think that you need something where you need to make more withdrawals, then you'll have to open a checking account. And you can't use a debit card on a savings account either. So just to make sure you guys know that.
So that answers some of the banking questions that people had. Just to be sure that we can get all the information in, we're just going to jump to credit, since that's really important. We can also share these slides with Hannah so that we can have these slides shared with everyone, so you can make sure to read this information and have a copy of it. So with credit, essentially the idea behind credit is that you receive something of value. Maybe that's a car, maybe that's your college degree, maybe that's just a daily purchase, and you're promising to pay for it later. Usually, most often with credit, there is a finance charge. So you do pay something additional for the benefit of not having to pay all up front. So credit cards are one of the most common forms of credit. They are a type of revolving credit. What we mean by that is that there is a spending limit. Maybe for your credit card, you can only spend $2,000 a month, let's say, or $2,000 total rather. And the billing cycle is usually 1 month, and you are going to get a bill for that amount. You're going to get a bill that, how can I say? Your purchases that you use with a credit card continue from 1 month to the next, and they can add up. Now, interest rates for credit cards are usually some of the highest. Interest rates are, if you were to take a percentage, so let's say 20% is not uncommon. Let's say you spend $1,000, then over the course of a year, that would grow by 20%, meaning that if you did not pay towards that, you would spend $1,200 for a $1,000 purchase over the course of the year. So these things can add up very quickly. Interest and APR. APR stands for annual percentage rate. That's essentially how much what percentage it will increase per month, or per year rather. Now, you can get a measure, an idea of your financial health, which is your credit score. Credit scores and reports are two different things, and we have on the slides where you can find both. So in the bottom right, you can see a diagram showing credit scores. Most people usually start out in the 660 range. It goes up through 850 and it can go down through 300. And it's essentially a measure of how safe it is for a lender to give you money. There are good habits such as paying each month, not missing payments, not spending too close to your limits will help increase your credit score. And similarly, doing the inverse of that can decrease your credit score. And the credit score that you have can be really important for making sure that you get the best rates possible. Lower credit scores can mean higher interest rates, often on credit cards. So a credit report is something different. Those are detailed reports of an individual's credit history. It'll contain a copy of all of your different credit accounts you have open. So say you have a credit card, you have student loans, you have, those are the most common ones, I would say. Those are all displayed on your credit report, and you can get 3 free copies of your credit report per year using the website annualcreditreport.com. That will give you all of this information. I encourage everyone today, if you haven't already, to go get a free copy of your credit report. And you can use the application for phone. They also have it on the website as well. Credit Karma can tell you what your credit score is. And I realize I'm going through that a bit quickly, and I'll try and make sure there's time for questions on that. I just want to be sure that we get everything. Loans are, they go hand in hand with credit. So closed-end credit, those are loans that are used for a specific purpose and last a specific period of time. An example might be a car loan. You have a fixed rate, a fixed payment. Typically, you have to pay $300 a month for 7 years to pay off your car, for instance. Other examples of that could include a mortgage to pay for a home. And student loans are a relatively good example of that, but you could actually impact how much you pay each month.
There's also another type of loan. He mentioned closed end. There's also open end, or they call it revolving credit, which would be your credit card. It could be sometimes a line of credit, where you pay it back and you get to use it again, similar to a credit card. Those would be called open ends of credit.
Mm-hmm. So these are just some tips that we have on how to be wise with your credit and wise with your money in general. Take the time to figure out how to budget, which we talked about, and maybe start making a budget. Use your credit cards, not necessarily for, how can I say? Use your credit cards with caution. You should use them because using credit cards and making payments towards your credit card is very important for building your credit score. It can actually be detrimental to you if you were to avoid credit cards entirely, because then when you want to get a car loan or if you want to get a mortgage at some point, they don't have that history of payments to go off of, and your credit score might not be as high. But do use them with caution and recognize that the interest can add up. Pay, as it says, on time in full as agreed. So what we mean by that is make a credit card payment that is the full size of the statement. So an example of that would be only spending as much on your credit card ideally as you can afford to pay off at the end of the month. So an example might be using your credit card to pay for some of your books for school, and then at the end of the month paying it off in full. You will not accrue interest that way, and you will build your credit score. And lastly, just try to avoid making any large purchases that you're not necessarily sure how to pay off. Like it says, it's best to try to live modestly now, recognizing that your income will hopefully grow after you graduate and you can get some more of these luxuries, let's say.
Occasionally you may have to make purchases that come up. Sometimes we have car repairs or something like that, but being able to budget out that payment over time is always helpful. Mm-hmm. A couple of questions that we had that you had sent in was, how does someone make or create credit? Generally, you know, probably the easiest way is usually getting a credit card and paying it back responsibly. You know, monthly, making sure you make your monthly payments, or paying it off every month. You know, one of the best things, you know, no matter what the credit company gives you as a line of credit, one of the best things to do is to institute your own credit limit with that card. Like if your credit line is $1,000, you know, telling yourself that you will never let your credit card get over 300 or 500, because you know that that is an amount that you can easily pay back. So that way that'll help keep you out of debt. And one of the things that they look at with your credit report that goes into that, your credit score, is how much of your credit you are using. And generally they don't like to see people using more than 10% is a really good number, but definitely not more than 30. So when you get up into that range, it makes it harder for you to acquire additional credit. I know that sometimes students are maybe getting solicitations from banks about getting credit cards, you know, and feel free to contact myself or Ari if you have one and you're not sure about. We can certainly walk you through that. And someone asked about interest rate for your student loans. The best place to look that up is at studentaid.gov. They have what's called a repayment calculator, which will help you see how much interest you'll be paying over time. Okay. Was there any other questions that I didn't get to that you are burning to know? Oh, someone asked about work study. I'm not sure how that's going to work this year. I would definitely keep your eye on the COVID website for BC for this coming year to find out what's going to happen with work study. Any other questions? I'm sorry, we went a little bit over time.
One of the questions I saw in the chat was, will having an emergency fund of 3 to 6 months negatively affect our financial aid package?
my answer to that is it shouldn't, unless it's a sizable amount. And sizable is meaning like thousands of dollars, you know, like probably more than 5. But I will check on that answer and get back. I'll get back to Hannah or call. But most of the time it should not.
Right. So if you have more questions, please, you can email us at success@bc.edu. And also as well, we will share the slides with Hannah, and Anna can then share that with everyone else.
Thank you very much for having us today. We'll see you next month.